Morning and welcome to the post-MPC press conference. The Monetary Policy Committee of the Central Bank of Kenya held its meeting yesterday, the 6th of February, 2024. And today, the chairman of the MPC, who's also the governor of the Central Bank, will take us through the deliberations of that. As is usual, you can send your questions through Slido, www.slido.com, hashtag MPC0224. So without further ado, I'd like to introduce the chairman of the Monetary Policy Committee, who's also the governor of the Central Bank, Dr. Kamau Thugge.
Thank you, Wallace, and good morning, everyone. During its meeting on February 6, 2024, the Monetary Policy Committee raised the central bank rate, the CBR, from 12.5% to 13%. The MPC noted that overall inflation had remained sticky in the upper bound of the target range. All key components of inflation, fuel, food, and non-fuel, had increased in January of 2024. There continued, albeit reduced, pressure on the exchange rate, and therefore concluded that further action was needed to stabilize prices. The proposed action will ensure that inflationary expectations remain anchored while setting inflation on a firm downward path towards the 5% midpoint of the target range, as well as address the residual pressures on the exchange rate. The MPC will closely monitor the impact of these policy measures, as well as developments in the global and domestic economy, and stands ready to take further action as necessary in line with its mandate. The committee will meet again in April of 2024. Starting with the global context, headline inflation has continued to decline across most economies due to tight monetary policy and lower commodity prices, particularly of oil and food. In general, the inflation in the US, the UK, the Eurozone, and China, as well as India, have, since inflation peaked around September of 2022, have declined persistently. Looking at the core inflation, which responds to monetary policy, we see that there has also been a persistent decline in that component of inflation, but nonetheless, it continues to be above the relevant target ranges. On fuel prices, we see that Marine oil price has declined from its peak. In January, it averaged about $79 per barrel. That is compared to $83 per barrel in 2023. On food, the global food prices, those have continued to decline, although there has been stability over the last few months. But nonetheless, we see that for January, there was a decline. And overall, up to January 24, the 12-month change in food inflation was about 10.4%. With regard to the global economic outlook, that is estimated at 3.1% in 2023 and is projected at 3.1% and 3.2% in 2024 and 2025, respectively. In terms of the advanced economies, we see a slowdown from 2.6 in 2022 to 1.6, and roughly it's supposed to or is estimated to grow at about the same rate in 2024 and 2025. Of interest is the growth for the United Kingdom, which has decelerated from 4.3 in 2022 to only 0.5, and only is expected to pick up to 0.6 this year. And of course, that is important because the UK is one of our trading partners. Equally important is developments in the Eurozone, where we have seen a deceleration of growth from 3.4 to 0.5, an estimated 0.5 last year, and this year we expect a growth of 0.9. These are estimates from the World Economic Outlook that is done by the IMF, and these figures were just updated a couple of weeks ago. In terms of the emerging market and developing economies, there's been a fairly stable growth from 2022. I've seen a growth of 4.1, and then 4.1 in 2023, and 4.1 also expected this year, and 4.2 next year. And of course, what is driving that growth is both China and India. In the case of sub-Saharan Africa, there has been, again, a deceleration to 3.3% in 2023. But we do expect a pickup this year to 3.8 and further to 4.1 this coming year. And of course, it's interesting to note the developments in some of the key sub-Saharan African countries. South Africa still is struggling with its growth, which was estimated at 0.6, and this year is expected to accelerate to 1%, which is still quite low. Nigeria has maintained a growth of around 3%, and that is expected to be sustained in the next 2 years. And of course, just to highlight Kenya, although I'll be coming back to Kenya with some more details, according to the IMF projections, you can see that in 2023, the growth was estimated at 5.1. I think later we'll see that our estimate is more around 5.6 and not 5.1. But just to note that growth, even the IMF growth of 5.1 is well above the sub-Saharan Africa average. It's well above the emerging market and developing economies average of 4.1. and clearly is well above the global average of 3.1 for 2023. And also going forward in 2024 and 2025, we do expect Kenya's growth to average at around 5% according to the IMF, and 5.3% in 2025. And these growth rates are well above the global average, well above the emerging market and developing economies average, as well as sub-Saharan Africa averages. Turning to domestic inflation, in January, the inflation remained sticky in the upper bound of the government's target range, and all components of inflation increased in January. Specifically, inflation increased from 6.6 in December to 6.9. And what drove that increase was food, which increased from 7.7% to 7.9. And fuel inflation also accelerated from 13.7 to 14.3. And finally, the non-food, non-fuel also increased from 3.4 to 3.6. In terms of the contribution to overall inflation, in January, food continued to dominate with 3 percentage points, followed by fuel at 2.8 percentage points, and then followed by the non-food, non-fuel at about 1 percentage point. Turning to non-food, non-fuel inflation, we see that it had been accelerating since November 2021 and reached a peak in around February of 2023, and then since that time has continued to decline and reached about 3.3% in November. Of course, of concern, and this is one of the concerns of the Monetary Policy Committee, was the fact that there has been an upward turn in non-food, non-fuel inflation from 3.3 to 3.4 and to 3.6 in January. In terms of fuel inflation, this had, as I said, increased from 13.7 to 14.3, and really the key contributing factor to that increase is electricity, And you can see the contribution of electricity to fuel inflation. Rose from 3.2 to 4.7, even as transport costs were reduced from 5.4 to 4.7. But essentially, just to note that fuel inflation really is driven by pump prices, electricity, and transport costs. And in the case of January, what resulted in an increase in fuel inflation was the increase in electricity prices. With regard to food inflation, we've seen a steady decline until around August of 2023, when inflation appears to have stabilized and seems to fluctuate between 7.5 and roughly 7.9. In the case of January, as opposed to previous months, we see that the main contribution to food inflation was actually non-vegetable inflation, whose contribution increased from 4 percentage points to 4.3 percentage points. Again, in regard to vegetable inflation, again, just to note, there was a slowdown compared to previous times, and the inflation of 16.6% really comprises of mainly onions, tomatoes, potatoes, as well as carrots. With regard to non-vegetable inflation, again, this has continued to perform quite well. This we are looking at the products such as wheat, maize, milk, and edible oils. And as you can see, since around September 2023, the inflation has actually been negative and therefore contributing to reducing the overall inflation rate. One key item to note is the development in the sugar price, which has continued to decelerate globally as well as domestically. Globally, there's been increase in supply, and of course domestically, we've also seen an increase in importation of sugar that has increased the supply of sugar in the market. But also the factories were also reopened in October, and that has also contributed to an increase in supply of sugar, and therefore reduced the pressure on sugar prices has reduced. In terms of the domestic economy and the prospects going forward in terms of growth, for 2023, we are expecting growth of about 5.6. For the first 3 quarters of the year, we had growth of 5.5 the first quarter, 5.5 the second quarter, and an acceleration to 5.9. Perhaps just to So the fourth quarter, we expect, and I'll come to that slide later on. We expect the fourth quarter growth of 5.8%, and therefore for the year as a whole, we do expect a fairly robust growth of 5.6. This is a revision. Early on, we had 5.5 for the year as a whole, but based on performance through September, we think that it's possible to achieve 5.6% growth. And this fairly strong growth is coming from the agricultural sector, which through the first 3 quarters had increased by about 7%. We expect for the whole year for it to increase by 6.6%. Incidentally, this is probably one of the highest, is one of the highest growth rates in agriculture since about 2010, and has definitely boosted the overall growth of the economy. The services sector continues to perform well. Last year in 2022 grew by 7%, and we do expect a fairly robust growth of 6.6, which will continue to the next year. So overall for 2024, we expect agriculture to continue to perform well. We expect services to continue to perform well. And by services, I'm talking about the wholesale and retail accommodation. We expect a recovery in transport and storage, particularly as the exchange rate stabilizes and fuel prices continue to at least stabilize where they are, which is a reduction compared to last year. Perhaps of interest is the manufacturing sector, which for 2023 is estimated to increase by 1.9. This is still well below where manufacturing should be. We expect with the government implementing some of its programs in 2024 that manufacturing value addition in manufacturing will start to increase, and we have increased the growth rate in the manufacturing sector from 1.9 to 2.9. Looking at the leading indicators of economic activity, we see that in the fourth quarter of 2023, we are, I mentioned this a bit earlier, we are projecting a growth of 5.8 in the fourth quarter of last year. And in the past, we have been fairly close if you just look at the previous estimates. And so if we come around, if we get growth of 5.8 in the fourth quarter, then we should be able to achieve the 5.6% growth for the year as a whole. Just examples of agricultural performance, we see maize for the year 2023 to have increased by almost 30%. Wheat also to have increased quite significantly by 62.6%. Rice struggled last year because of the floods. Beans, Irish potatoes, sorghum, all of those displaying significant increases compared to the previous year. In terms of credit to the private sector, this has been trending up since March 2023. Here what we have tried to show is in blue is the overall credit growth, which we have adjusted for the exchange rate depreciation. And the lines in the columns in yellow are just the overall credit expansion without any adjustment to the exchange rate depreciation. And you can see, just looking at the overall credit expansion, it's in December, it increased from 13.2 to 13.9. But also, once you strip out the exchange rate depreciation, there still was an increase in credit to the private sector from 8% to 8.3%. Again, this is just a demonstration of credit expansion to the manufacturing sector, to the trade sector, transport and communication, increased by 20.8%, and also consumer durables. There was some expansion of banking sector credit to the private sector. On the overall balance of payments, just to note that the projected current account deficit for 2023 is roughly $4.3 billion, and that we expect most of that to be funded by the capital and financial account, and to have an overall balance of payments deficit of 982. And going forward for this year, we do expect a widening of the current account, at least in terms of dollars, and to have a current account deficit of about $4.9 billion, and to be mostly funded by inflows of capital, and to have just a residual deficit of $111 million. Looking at the current account in relation to GDP, that has narrowed quite significantly from 2022, when it was 5%, and last year we saw it narrow to 3.9%. We'll come to the reasons for the narrowing. Going forward, we expect the current account to remain around 4% and to remain around that for the medium term. And we think that at this level, this is a sustainable level of the current account. It will be supported by the fiscal consolidation that is taking place. And over the next 3 to 4 years, and we'll see that later in one of the slides, the fiscal deficit is supposed to decline from 5.6% last year to roughly around 3% in the next 3 to 4 years, and that reduction in the fiscal deficit should support maintaining this low current account deficit at around that level. Of course, we expect, because of some of the efforts the government is taking, we do expect an increase in foreign direct investments. And although foreign direct investments are relatively low now, around 0.5% of GDP, we do expect that to pick up. And over the medium term, we would expect that this current account deficit would be funded significantly by foreign direct investments, and therefore just leave the loans and portfolio inflows to fund the rest. So again, looking at the performance of exports in 2023, there was a reduction by 2.2%. This reduction was rather broad based, and the only items that recorded positive growth were the mineral fuels, which increased by 10.9%, and we also had some positive developments in chemicals and related products, particularly medical and pharmaceuticals, and there we had a growth of about 2.8%. Manufactured goods also recorded positive growth of about 11.3%, and this was mainly driven by cement exports, but cement exports as well as iron and steel exports, and this was mainly to the regional markets. In regard to imports of goods, there was a reduction by 11% from 19.2 billion to 17.1 billion. And again, this was really broad-based, with only food and live animals recording a positive growth of 13.2%. But otherwise, all other categories, the chemicals and related products, manufactured goods, machinery and transport equipment, all registered significant declines. Still in the current account, we had very good performance in the tourism sector, with tourist arrivals increasing by 31% at the end of 2023, and we expect this good performance to continue in 2024. Similarly, for remittances, this has been a very steady source of foreign exchange for the country. It has always recorded positive growth, and indeed in 2023 it increased by 4%, and we do expect this 4% to increase to 5% this year, given the strengthened U.S. economy, where most of our remittances come from. On the financial account, again, this is how much we'll be expecting to get from the financial account. and this would include portfolio inflows, foreign direct investments, as well as disbursements from our development partners, multilateral institutions, as well as regional institutions. And we do expect a total of 3.5 billion in 2023 and 4.6 billion in 2024. On the issue of the exchange rate, what we have included here is a comparison between the indicative rate that the CBK used to quote and the interbank rate, where the actual transactions would take place. And you can see, just going back all the way to 2023, there has been a gap between the interbank rate, where transactions take place, and what the central bank was publishing as the interbank rate. This was an indicative rate that the central bank published. So we decided that to only have one rate and avoid this parallel rate, and therefore starting in 2024, we are now just publishing one rate, which is the rate at which the transactions actually take place. In terms of the central bank's usable reserves, these have increased between end of December and February. You can see the increase from 6.5 billion to 7.1 billion. And this reflects the disbursements that we received from the IMF, but we also got some disbursements from the TDB. So our reserve position is strengthening, and we expect that to continue to strengthen. In terms of the fiscal performance, as I did indicate, you can see the expected fiscal consolidation, which is just another word for reduction in the fiscal deficit, from 5.6 in 2022 to 2023, from 5.6 to 3.1 in 2027-28. The deficit for this year, 23-24, we have shown as 5.5. This is actually what was in the supplementary budget, supplementary 1. We understand from the National Treasury that there will be a supplementary 2, and that deficit will be reduced below 5%, and therefore we will see a much smoother fiscal consolidation from 5.6 to somewhere around below 5%, and ultimately to 3.1%. And this profile of fiscal deficit reduction should be consistent with reducing our debt to the sustainable levels that Parliament has approved of the 55% of the net present value of debt to GDP. So thank you very much.
Thank you. That was the Governor of the Central Bank, who was also the Chairman of the MPC, giving the update to the MPC's deliberations as the decision was made yesterday. We'll jump straight into the questions, and we begin with Patrick Alushula. Patrick Alushula is from the Nation Media Group. And Patrick is asking, are there any new digital credit providers licenses? How is the Central Bank of Kenya dealing with credit-only providers who are not necessarily issuing loans via any digital platform? Jimmy Mbogo from Citizen Television: is the Central Bank of Kenya planning to intervene to minimize volatility on the currency? Then he continues to ask, when should you expect a softening in monetary policy? The Federal Reserve and the Bank of England say they're going to do so around May. And finally, what's the cumulative value of non-performing loans in the banking sector, and is the central bank concerned about the rising interest rates, with some banks charging close to or more than 20%? Herald a Law from the People Daily. How do you see Kenya's fiscal situation post-Eurobond regarding its ability to settle domestic debt and other recurrent expenditures?
Let me start with Jimmy Bogo's question, which is on the CBK, whether CBK is planning to intervene to minimize volatility in the currency. Let me say the central bank's policy on the exchange rate is to allow the exchange rate to be determined by market forces. However, we do intervene when we see that there is excessive volatility. And as I've indicated before, it is my view now that the exchange rate has overshot the equilibrium rate. So there could be scope for central bank to support the exchange rate going forward. However, having said that, we do believe that some of the actions that certainly the action that we have taken as the Monetary Policy Committee, the increasing of the CBR by 50 basis points should serve to strengthen the exchange rate. But there are also other developments which I believe will support the exchange rate, and let me just mention a few. First is the disbursements that we have been receiving from multilateral development partners. The IMF, as I indicated earlier, did disburse $684 million just last month. The Trade Development Bank also has made some disbursements, almost 400 million within the last 2 months. We are also expecting disbursements from the World Bank around March, April of almost, according to the Treasury, of about $1.5 billion. In addition to all that, of course, we have seen some interest by foreign investors in government securities. We are in the process of issuing the infrastructure bond, and we have seen significant foreign interest in purchasing the infrastructure bond. And therefore, we expect also foreign exchange to come in from the purchase of the infrastructure bond. And then finally, there has been some countries in Africa have now gotten access to international capital markets. There's no reason why Kenya cannot access international capital markets. And we have engaged our lead managers, and we expect our lead managers to tell us when it's appropriate, when the market is appropriate for us to be able to access capital markets, to be able now to deal with the Eurobond that will be falling due in June of 2024. The other question was when should we expect a softening in monetary policy? The Fed and BOE says around May. It is also our expectation that the Fed and Bank of England may likely lower rates around that time, around May, June. In our case, of course, we will, as I said earlier in my statement, we will be meeting in April. We are always data driven. We will look at the performance of inflation. We will look at performance of the exchange rate. Our mandate as a central bank is to ensure stability of prices, and it's on that basis that we'll take action. Of course, we would look forward to a lowering of international interest rates, and that will reduce, obviously, the cost of borrowing internationally. And but for our part, we will be keenly looking at the performance of inflation and the exchange rate, and that will guide our action in terms of whether we relax monetary policy or even tighten monetary policy should if the inflationary pressures and the pressures of the exchange rate not reduce. Yes, there was the issue of the NPLs, the non-performing loans. Yes, indeed, of course, we are concerned about the non-performing loans and what impact the rising interest rates would have on them. Of course, we also note that the NPLs have actually been declining for 3 months in a row now, starting in November, when they were 15.3%. In January, they are 14.8%. We continue to keep an eye on them, but we are also convinced that stabilizing inflation and stabilizing the exchange rate at this time is the most critical thing that we can do in order to have a stable macroeconomic environment, which actually is the one that encourages both domestic as well as foreign investments. There's a question on the how do I see Kenya's fiscal situation post Eurobond regarding its ability to settle domestic debt and other recurrent expenditures. I'd rather leave this for the Treasury to answer, but from what I can see, the Treasury is very keen in mobilizing domestic resources. It's very keen on reducing non-productive expenditures. It's very keen on using the public-private partnership framework for capital expenditures and therefore reducing spending on their part. So going forward, I really don't see any issues regarding the ability to settle domestic debt. The government has never ever defaulted on settling domestic debt, and I don't expect that it will do so. And the whole idea about the fiscal consolidation is really to generate additional resources, cut spending, so that issues of settling domestic debt never do arise. On digital credit provider licenses, yes, we continue to provide for new licenses.
Thank you. The second set of questions will begin with David Herbling from Bloomberg News. David asks, with markets reopened after Ivory Coast, Benin having issued their Eurobond, how feasible is a Kenyan Eurobond issuance this financial year? Where do you see it priced and how much can be raised? Secondly, what's the size and timelines for Kenya's inaugural dollar diaspora bond? You also mentioned previously plans to float a US dollar bond locally. Is there any updates? Samuel J. here from Renaissance Capital says the Kenya shilling stability, Kenya shilling has been stable over the last few days. What's contributing to this, and do you expect this stability to continue? Stephanie Kimani from I&M Bank Kenya, currently CBK appears focused on stabilizing the Kenya shilling. What US dollar to Kenya shilling rate is a CBK aiming for, or at the very least at ease with achieving? Finally, Constant Munda from Nation says diaspora remittances from Africa posted significant growth in 2023. What is the Central Bank of Kenya's outlook, and which countries are likely to sustain the uptick trend?
Thank you. Let me start with Herbling's question, which states that the Ivory Coast and Benin have accessed the capital markets, and how feasible it is for Kenya to issue a Eurobond this financial year, and what the price and amount may be. As I indicated earlier, we do have some lead managers on this particular issue, They have been looking at the market to see when we can access the capital markets, and I leave it to them to announce the timing for going to the international capital markets. But as the President had indicated, this is an area that we are looking at as in terms of liability management. But I believe the timing and the price, obviously, we won't know until the transaction takes place. But in terms of the timing, I believe that the lead managers will advise us, and we will let you know as soon as possible. On the diaspora bond, I think we have put that a bit on hold. We want to see how the Dow CSD can address this, where there was a lacuna, in the sense that it was very difficult for Kenyans living abroad to be able to invest in government securities. That has been made very easy by the Dow CSD. And we are still monitoring its performance. We are still yet to engage more diasporans so that they know that this instrument or this platform is available for them to be able to invest. Someone here says the Kenya shilling stability has been The Kenyan shillings has been stable over the last few days, and what's contributing to this, and do you expect this stability to continue? Yes, I do expect this stability to continue, and I gave the reasons for that. First of all, we have now taken action on raising the CBR higher to 13%. We are expecting external inflows because of the infrastructure bond, and we've also seen some foreign interest even in just in the regular auctions of treasury bills and bonds. We are also getting additional financing from the multilateral institutions, the IMF, the World Bank. This money was not available in the first half of the financial year, and as I was just mentioning, we do expect to access international capital markets, and that will help stabilize the dollar. And I know there has been a lot of concerns about how we are going to deal with the maturing 2 billion euro bond in June, and I think that has led to a lot of uncertainty, and people wondering whether the government will have enough reserves to be able to pay for that debt. Where will it get those reserves? And but I just want to assure the Kenyans that one, we have the resources, the money that is coming in from the World Bank, from regional institutions, from the international multilateral institutions, our accessing capital markets, that this risk that of the Eurobond will be, in my view, will be completely eliminated, and that should also contribute to a strengthening of the shilling. There's a question from Stephanie Kemani, says currently CBK appears focused on stabilizing the Kenya shilling. What US Kenya shilling rate is the CBK aiming for, or at the very least it is with achieving? I think the most important thing now we have is really to stabilize the exchange rate. I have been of the view that the exchange rate has overshot its equilibrium value. I'm of the view that the current rate is not really consistent with the macroeconomic fundamentals, and it's elevated, and therefore I can't give you a specific rate, but we, as I indicated, we do believe that with the actions that we have now taken and what is expected inflows of foreign exchange, that the exchange rate should stabilize and move towards that rate that is consistent with the strong macroeconomic fundamentals. On the last question was by Constant Munda, and it says diaspora remittances from Africa posted significant growth in 2023. And what is the CBK's outlook, and which countries are likely to sustain the uptick trend? Yes, there was a significant growth in 2023. As I said earlier, it was about 4% to 4.2 billion, which is the highest remittances that we have ever received. This year we expect 5% growth. And as I said, most of our remittances come from the US, which somehow seems to be have a fairly strong economy at the moment. The job market is fairly strong in the US. So we do expect continued growth of remittances from the US. And of course now our second largest source of remittances is Saudi Arabia. So we do expect some increase in remittances from that source. But yes, in general, we continue to expect remittances to perform well going into 2024 as well as over the medium term.
So the final set of questions, we will begin with Kefa Moirore from the Business Daily. He says monetary aggregates, that is money supply, private sector credits, have remained expansionary despite the CBK's tightening. Is this an indictment on weak policy transmission? Stella Swake from Standard Investment Bank asks, in the calculations of the indicative rate, do you include Forex Bureau rates? I understand that it's a weighted figure. Kevin Otich from Capital FM says, recently Kenyans have been treated to frequent M-Pesa outages. Aren't these shutdowns a threat to the country's banking and financial services systems? Constant Munda from the Nation Media Group, diaspora remittances from Africa posted significant growth. What's CBK's outlook, and which countries, I believe this has been answered, but which countries are likely to sustain the uptick trend? We had a few more questions, but unfortunately we may have to end the questions with these ones.
The question from Kefa Moirore is that monetary aggregates, money supply, private sector credit have remained expansionary despite tightening, and whether this is an indictment on weak policy transmission. It's true that money supply has been quite expansionary. In fact, I think at the end of 2023, we saw M3 growing by more than 20%. And as I indicated earlier, private sector credit grew by 13.9% at the end of December 2023. But Kefa, you may also recall in one of the slides where we showed that growth of 13.9%. We also showed the growth in credit to the private sector once you strip out the depreciation of the exchange rate. And you'll see that actually the growth in credit to the private sector once you remove the depreciation was roughly about 8, I think it was 8.3, 8.4%. So no, it's not that there's been a weak policy transmission. Part of the reason why the monetary aggregates appear to be increasing is purely because of the exchange rate depreciation. As you know, within the M3, within the let's put it another way, within the deposits in the banking system, there are foreign exchange denominated deposits. And so when the exchange rate depreciates, even without an increase in those deposits, it appears the monetary aggregates increases purely because of the exchange rate depreciation. And similarly with private sector credit, in the event where there's credit to the private sector which is denominated in dollars, when the exchange rate depreciates, then we have this appearance of an increase in credit to the private sector. And that's why it's so important for us that we arrest this depreciation of the exchange rate. There's a question on the calculation of the indicative rate, whether we include the Forex Bureau rates. We don't include the Forex Bureau rates. I think the rate we now publish, the CBK publishes, is the interbank rate, and it's no longer an indicative rate. It is actually now just a weighted average of the actual transactions in the market. I think on the issue of M-Pesa, we are in very close touch with Safaricom, because of course we recognize the risk to the economy of these outages, and this is an area of concern, and it's an area that we are in very close talks with M-Pesa to see how they can be alleviated. Finally, on diaspora remittances, I think from Constant Munda, I think this is the same question which I've already addressed.
So thank you very much. The governor of the central bank was also the chair of the MPC, Dr. Kamau Thugge. As indicated, there were quite a number of more questions, but most were revolving around the same issues that have already been handled, both in the presentation and in the question and answer section. And so we want to leave it there. And as the MPC said during its press release yesterday, the plan is to meet in April 2024, 2 months from now. So between now and then, we do hope to see you, and please keep updated on all CBK matters on all our channels, including the new one on the WhatsApp channels. But for now, we thank you and do have yourselves a good day.